Hello and welcome to ATFX's Core PCE Price Index Preview. It is the most important data release that we've got coming up in the markets this week. Clearly, a lot of moves are being coming on the back of what we got from the Federal Reserve last week. We did get 25 basis points from the Federal Reserve. That instantly saw a bit of a dollar sell-off, but since then the dollar's actually been bought and so have US Treasury yields, and there's a couple of good reasons for that. We already had 75, it was 73 basis points baked into the pricing in the market. And Jerome Powell came through and he acknowledged the issues that the Fed's got with the US jobs market, but also we have to keep an eye on what's going on in inflation. And of course, this is the inflation number that the Fed pays the most attention to. So to many, it was, even though we got the cut, it was less dovish than they'd expected. There was a fear for some in the market that the Fed were going to come in a lot more dovish. But the indication we got from Jerome Powell, and certainly the reaction from FX and bond markets, probably wasn't as hoped for by some investors, although stocks are currently, as I speak, trading at all-time highs, as is gold, by the way. The other thing that we've got before we hit those inflation numbers, some key updates from Fed members. Now, let's have a quick look at the data. That core PCE number comes in on expectation at plus 0.3%. This month, the month-on-month number expected to show a plus 0.2% change, slightly coming down, and you would think helping those doves in the Fed. The other number that we're looking at is the year-on-year number. Now, that came through at 2.9 last time, which was higher than expected and expected to come in there again. There are even some economists and some of the models out there looking for a 3% year-on-year number. That does not tally well with what we're pricing in with the Fed. If we then get the Fed chair, Jerome Powell, saying that he's looking at inflation a lot closer and a higher print on the year-on-year or indeed the month-on-month, then we could see markets race off. So what we're going to do now, we're going to have a look at a few of the charts where there could be some trading opportunities, and they are sitting at crucial levels. A few of the majors, and certainly gold, which has taken off in the last few hours. So I have to kick off with the gold chart. As I said, it's been the highlight of probably the last few days. Actually, since the Fed came out with that 25 basis point, we hit fresh highs. These were the previous fresh highs back in April. As you can see, we smashed through them, made another new high, and then we've broken higher again in the last even few hours, currently sitting basically at all-time highs, 37.54. I think we've just topped out just around 37.55. It has been an astronomical move for gold. And a lot of commentators out there are calling this move on the back of the Fed's rate cutting cycle that's commenced again. It did take us until September before we got it, but they're anticipating more cuts. Yields coming off, yields anticipated to come off, I should say, because yields have actually risen in the US since the Fed meeting, and gold has become very, very popular. To me, I think we've got a big portfolio diversification somewhere, and I did notice that Bitcoin took a bit of a hit over the last few sessions, but certainly gold is popular. You've got to trade what you see, and it's moving to new highs. At the moment, difficult to pick tops. Obviously, don't stand in the way of a moving freight train. And we may well have established a high by the time we get there on Friday. At the moment, it's a bid on dips environment. You're going to be looking for dips down to this 3,500 level over the last couple of days, maybe 36.25, but it is racing higher. If we do get lower prints from these inflation numbers, expect gold to go even further north. So that's gold. Let's have a look at a couple of the major currencies as well. So this is the daily euro chart. Also good, got some good moves and fantastic trading opportunities. I think probably one of the best trading opportunities coming up off this US data at the end of the week. It is trading very nicely on this daily chart. As you can see here, this support trend line is very strong. We've got 1, 2, 3, 4, 5, 6, 7, 8 touches. We touched upon it yesterday in trading, and we got a little bit of dollar selling coming through. Euro rose up, but expect one of these trend lines to break at some point, and this inflation numbers could be good. So on the month-on-month numbers, if we get a higher number, if we get that 0.3, 0.4, 0.5, expect this downside to be challenged, and a break opens the way very quickly, I think, for 116, and then opening the way, then again down to 114, the figure. Conversely, of course, and don't forget that year-on-year number, if it does come in at 3, if it does come in at 3.1, that move will be top side for the dollar, down for the euro, big break. Conversely, other side, if we get a 0 print or a 0.1 on the month-on-month, or if we're looking at like a 2.6, 2.7, which was only a few months away in the year, we will attack this top side level, currently coming in at 119.09, the annual high at 119.18. A break there takes us very swiftly to 120 and then bigger levels above. So I think euro is looking a really good trading opportunity. Let's click over and see what dollar yen's got for us. Now, here's that dollar yen chart. It's actually traded in a very nice range. If you had options expiry anywhere in here, this 148 level, I would suggest, you would have had a fun time of it over the last few months. It is now also squeezing into a bit of a flag pattern. We've had a few looks up at these resistance levels come in here. 200-day moving average, now 148.57. This resistance trend line, now 148.88. Stronger numbers, which would give a more hawkish bent to the Fed, could see those levels challenged in a very short time. Breaks here would take us very swiftly up to these levels, just short of 151. A break there, we're looking for it, and that's going to be a longer term trade. We're looking up here for around about 154.80, 155 challenges. So could be some big moves off of this number. Obviously, conversely, the other side is true. The weaker number will challenge down to this trend line. It's not a bad trend line. It's got a couple of points. This trend line and this recent low down at 145, let's call it 145.50, would challenge this very quickly. A break takes us down to this longer term support trend line about 143.70. I'll just finish off our analysis with cable, which could also see some big moves. And here we are on the sterling chart. Now, it's similar to the euro, probably not set up as well as the euro is from a technical perspective. But as we know, cable will move, and it will move hard. And when it goes, we could get 100, 150 points very quickly. Similar situation, support coming in here around about 134, the figure, about 120 points away from that. Resistance a little bit further away, just underneath 138, the figure as well. But I think the risk for the market, and we've been calling it for a while, is that we do see more dollar buying. And don't forget, we've seen, this is the Fed spike. We've seen a lot of dollar buying. It's down from 137.10 cable to 135.20. We get those stronger numbers. It will challenge these levels. A breakthrough opens the way to that 200-day moving average way down at 131.20. Weaker numbers, it opens the way for more dollar selling to come through. Expect treasury yields to get hit. We will attack that 138 level. So some fantastic trading opportunities there. As always, if you need anything from us at ATFX, please do get in contact, and good luck with your trading. Thank you very much.